Thank you for joining today's session. We will be getting started shortly. We do have a lot of folks signed up for today's session, and we want to give everyone a moment to log on and get connected so that we can dive into today's session. I do want to thank you all for joining us today. I am Jasmine Garrett here with the New Jersey Economic Development Authority. Today's session is an informational overview of the certification and insurance process for the CPAs of the New Jersey Film and Digital Media Tax Credit. A quick housekeeping note, we do suspect that many questions will be answered in today's presentation. However, you are able to write in questions at any point during the presentation using Zoom's Q&A feature. It is one of your Zoom command options and will allow us to make sure we are able to get back to you and let others see these questions and answers as well. Today's session is being recorded and will be posted to our NJEDA and YouTube pages. The slides and other resources will also be available in the next few days. Now, to get us started with the presentation, I will shift things over to NJEDA's Program Manager of Tax Credit Relationship Management, Tina Tolley. Tina?
Well, hello and happy Friday. This is going to be a continuation and an expansion on the session that we held in February. We were looking at the pipeline and what's anticipated coming up. And given that there's a larger number of digital media projects than we had anticipated, we did not want to hold off until the fall going over some of those details there. What I would like to do is start off with, because I'm seeing a lot of familiar names to us in the participants list, I wanted to introduce the team that manages to keep all of these moving and getting issued and keeping our applicants happy. So we'll start off with Denise Goldborn. She's a senior relationship officer for us. Denise, you want to take yourself off mute and say hello?
Sure. Hi, my name is Denise Goldborn, and it's great to meet you all. Looking forward to today's meeting.
Okay, thank you. And Tom McCusker, the other half of my dynamic duo here, also a senior relationship officer.
Yep. Good afternoon, everyone. Nice to meet you. Looking forward to this webinar, and hopefully you guys can see a face with a name now with me. So it's a good thing.
Excellent. And then we all report to Tyshawn Lee, who manages to wrangle us and keep us keeping things moving and letting us do our thing and trying to keep everyone happy here. Tyshawn, did you want to say hello?
Yeah, no, hello. Welcome, everyone. Thanks for joining us on this Friday afternoon. For those that are newly joining us and then those that have, attended our first session, we hope you get something valuable out of the information that's going to be presented. As Tina said, this will be kind of an ongoing guide, biannually, so that we can all kind of stay on top of the latest and greatest and make sure that we're all on the same page and we're being consistent with our messaging, and that you guys have the latest and greatest information of what we're looking at when you are submitting your certifications for review. So thanks again for attending, and again, hope you get something valuable out of today's webinar.
Okay. Mercedes, if we could go to the next slide, please. Okay. For the very few of you on the call that might not be aware of this, the Film and Digital Media Tax Credit is a spotlight incentive program for film and digital media productions in New Jersey. There are varying percentages allocated depending on the type of expense and the geographic location of that expense. So we do ask, if you are engaged to work on any of the certification materials, that you do refer to the project's approval letter for specifics, as there were various percentages applied at different timeframes depending on the application and or the approval date. And what we're looking to do is encourage job creation spending and economic growth in the state. You bring in a big production company, they need somewhere to eat, somewhere to stay, somewhere to spend their entertainment dollars. So New Jersey does in fact benefit from this. Next slide, Mercedes. Okay. key requirements in the film program is either $1 million in New Jersey expenses or 60% of the total film production expenses, exclusive of post-production costs, have to be incurred for services performed and goods purchased through vendors authorized to do business in New Jersey. Qualified expenses include wages, set construction, equipment, and post-production. Obviously, we would like to incent people for spending the money in New Jersey, so we are looking for New Jersey-based vendors and workers. And again, it must be filmed in New Jersey to qualify for the credit. Next slide. Okay. For digital media, there is a minimum of $2 million in qualified digital media content production expenses. At least 50% of that must be for wages and salaries paid to full-time or full-time equivalent employees in New Jersey. Footnote in here that we are looking at now is for applications after July 10th of 2024. Wages and salaries are excluded from the vendor spend portion of the certification. Qualifications in digital media include wages, salaries, computer software, hardware, data processing, quite the list there. Digital media content is defined as digitally formatted and distributed content, data or information created in analog form but reformatted in digital form, animation, video games, visual effects, interactive media. There's quite a bit inclusive in there, and similar to the film portion of the program, New Jersey-based vendors and workers are what we're looking to create the award on. We do ask that you remind our applicants, if you are in the game early enough with them, if you've been engaged early enough, to make sure that they are tracking the expenses, make sure everything gets submitted to us. For post-production, final production documentation, financials need to be in by the deadline on the approval letter to complete the tax credit process. Side note to that, it is the applicant's responsibility to know what the useful life of their tax credit is and when they would be able to utilize it or when a potential buyer would be able to utilize it. With that said, we can, in some instances, accept the certification package after that stated deadline, as long as the customer is aware of what their deadline for actual usage of the tax credit is. I would ask that you remind clients all supporting materials should be retained. We are a public entity. We are subject to audit from various areas, and some of our customers do get selected for their product to be audited, and the auditors do anticipate receiving requested information if they are audited. Navigation, and this is the fun part. A lot of what we do, a lot of what we use is on our website. And every now and then we get someone new to the program that is not aware of how robust the website is. So Mercedes, if I could ask you to go to the njeda.gov website. Okay. And Mercedes has already clicked on from our homepage the financing and incentives. And then we scroll down, film and digital media are both combined as they're under the same program here. It is alphabetical, fortunately. Okay. And if we scroll downward, there are drop downs on the left with the program basics, the film tax credit program, the digital media tax credit program. Mercedes, if you could drop down that film tax credit program, please. Okay. This is where some of the forms that are useful to the CPAs are housed. There is a frequently asked questions. There is the agreed upon procedures for CPA verification report there. The diversity plan would already have been completed in conjunction with application and approval. On the back end for certification, the diversity tracking sheet, if the customer needs it there, as is the diversity goal tracker. Towards the right side, we have the certification documents underneath the program statutes. And that has the checklist of the materials we're looking for, the no events of default certification, the payroll certification, the vendors, and the cost certification workbook. In our session in February, questions came up, were we looking to expand and revise the payroll certification form? And yes, that is in process, but is not ready to be released just yet. We were able to update the qualifying vendors list because we've seen a lot of questions coming back and forth where the vendor list calls for the name tax ID number and how it was determined that they qualify in New Jersey. 2 columns have been added, one for the total spend with that vendor and one for the highest dollar invoice to that vendor. And once we have that in, we will better be able to sort and filter and determine, once we get into the business registration certificates, whether we have the correct number. I do know that I've seen a lot of correspondence between the officers and the CPAs questioning the discrepancy in the number of BRCs provided versus the number of vendors listed on that vendor list. And we're hopeful that that will reduce a lot of the back and forth, make it unnecessary, and enable us to maybe pick up a little more speed in our turnaround on getting that tax credit approved and issued. Tax clearance is an interesting issue lately. There are instructions there, if we can click on that, for securing the tax clearance. Okay, and basically what this does is this is the applicant reaching out to taxation and taxation confirming that they are essentially in good standing with the state of New Jersey. This is required in the certification package. We do know that this is part of the application as well, and when we get into the visual, we do need to be sure that we have an in-force tax clearance certificate at all times during our process, just to make sure that no one falls out of compliance with the state. Mercedes, if we can go back to our website, we have the business registration. I think I had given you a link. There is a link to the business registration form housed in our FAQ sections, but it is through the Division of Revenue and Enterprise Services. And Mercedes, if you could go down to after the bullet points, where it says you may check and the blue hyperlink online registration inquiry, that is actually where the data will be entered, whether the CPA or the applicant is printing out the business registration certificates for the vendors. But again, the link to that, for those that can't quite see what the URL is for that, is actually also in our FAQ. So that should not be any big issue there. Okay. So then we can go back to the presentation. And we've covered that. Okay, personally identifiable information, especially in 2025, cybersecurity being what it is. We are very mindful of the fact that we are entrusted with a large amount of what should be very secure information. We are asking that we don't get password protected or encrypted files. We do have a secure system that your officer can give you a link to for you to submit payroll reports, things with the personally identifiable information, tax ID numbers, salaries, things that we really don't want anyone else to have access to. Again, myself or the officers can provide a link. And we will be rejecting any personally identifiable information sent through unsecure channels, just to make sure that we are in compliance with the state of New Jersey security requirements here. So any financial records, social security numbers, employer or employee information, we will not be able to accept via regular email, whether password protected or not. The complete certification package, I can tell you the last 6 months or so, I've seen tremendous improvement in our submissions in that everything that we need is typically provided. The complete package consists of the cost certification workbook, which should be signed by whomever has completed it and is taking responsibility for it. We've seen a few come through unsigned, but for the most part, I think we're over that obstacle. Payroll certification, whether our payroll report or a third-party payroll report. Proof of withholding and support. We do need to verify that appropriate taxes were withheld. Regardless of who paid the employee, any documentation that will corroborate the amounts presented in the AUP will be acceptable. The vendor listing, the CPA's AUP report, preferably with whatever relevant attachments or exhibits are referenced in the body of it, and the current valid tax clearance certificate. Continuing on, specific to film, we do need the principal photography dates, which we will get corroboration of with the Motion Picture Commission. And for film projects, evidence that the appropriate marketing materials or the logo appear in the end credits. And again, the Motion Picture Commission has the final say on approval for that. The non-default certification, which we showed is also available on our website, is basically the applicant asserting that they are not in violation to the best of their knowledge of anything that would preclude them from receiving this award. That form should be completed in full. I know we've had 4 or 5 in the last few weeks that one line or another is blank or everything's filled in and it is not signed by the customer. So that is something that would be a kickback to the relevant parties to get that corrected so that we can proceed. Prevailing wage affirmative action waiver or release letter. Typically, the AAPW is 2 pages at the end of the approval letter. I do know that frequently when a CPA is coming into this program for the first time, they're sort of chasing around trying to find out what that form is. That is part of the approval letter, provided it has been fully and properly executed. That would satisfy the requirements for us to be sure that the project itself is not subject to prevailing wage requirements in New Jersey. The majority of our projects include an approval for a diversity bonus. We can accept a third-party payroll report if diversity information is captured. Or in lieu of that, we have the diversity goal tracking sheets and the diversity goal tracker spreadsheet on our website for the applicant to aggregate the information from those individual tracking sheets. So we've got a couple different routes that we can go with that. We do need for someone to provide to us the data and the information showing whether they have met their goal or not. And some of the common issues that slow the certification down. I know that the AUP will indicate that the CPA has done their due diligence, they've done the review, they've audited the expenses, and they have verified that everything has been withheld properly. As much as we would like to rest on that statement with the CPAs, when we are audited, our auditors do want to see proof. So supporting documentation, we need to have that on file in order to make our auditors happy. For the diversity bonus, if it's captured on a payroll report, a summary is appreciated. I know a lot of the payroll reports that we see may have the same individual listed multiple times if it's a weekly payroll situation. So we may have somebody listed 5, 10, 20 times. Sorting and filtering at that point does slow us down a little bit. So any summary showing what the results would be, and typically the customer is the one that will do that. I don't believe the CPAs do that, but if you are seeing the package or submitting the package to us, it is appreciated. Each employee can only be counted once. We've had several instances where there has been a calculation of the number of females and the percentage they represent overall, and then the number of ethnically diverse individuals and what they represent overall. Those two numbers cannot be added. An ethnically diverse female is still only one person. Even if she may have done the job of two, she can only be counted once. Tax clearance certificates have been a little bit of a hiccup lately. They must be in the name of our applicant, and we will show you an example shortly. They are valid for 180 days, and the employer ID or tax ID number must match to the information we have from the application. BRCs, we need to quantify and include those that meet the reporting threshold. Remember, it is based on the size of the award as to what the minimum invoice spend is. As I mentioned earlier, we have updated our vendor list, and that should help us and reduce the number of questions to the CPA on why we only have the specific number of BRCs that we do per project. I think we have, okay. This is an example of the business registration certificate. You will see that this is for the New Jersey Sports and Exposition Authority. The effective date on this is January 1st of 1972, so that's when they became registered with the state. The date of issuance, and this I pulled out of an old file, was on August 29th of 2022 is when this was actually retrieved from that business registration certificate system that we showed you earlier. So the date of issuance is the date that you are verifying the information, not necessarily the date they became registered. Okay, up next is the tax clearance certificate. A few issues that we've had recently, they do expire. They're only valid for 180 days, and I've highlighted on the bottom, it even states that it is valid for 180 days from the date of issuance. The yellow highlighted section at the top is the actual date of issuance. In the body, underneath the incentive clearance certificate underline section, the agency's New Jersey Economic Development Authority. I do know when you go on the system, you get to select which agency you want this to be addressed to. We do prefer it be the EDA. The applicant ID number is a somewhat masked version of the tax or employee ID number with only the last 3 digits of the tax ID number showing. Then there is a slash and 3 zeros. That is a code from taxation that we look for. If that is anything other than 000, it is likely that taxation will reject it. While I'm not privy to what the list of their various codes are, I do know that 000 is what gets us through to taxation much quicker. from the tax clearance perspective. The vendor list should be fully completed. If we get a vendor list that does not have tax ID numbers listed on it, we don't have any way of verifying or knowing what they are. So we might need to remove that vendor from the qualified listing, which is not fair. If someone has that information and provides it to us, it just makes things go a little quicker and we don't run the risk of reducing the award. For qualified loan out employees, we've seen several AUPs that basically the CPA says, yes, we verified that all loan outs were accounted for and withholding of 6.37% was applied appropriately. Without a list of who those loan outs were and what the relevant dollar amounts were, what the wages or payments were, and what the withholding was, we cannot back into and verify that number for ourselves. That is another thing that will pretty much guarantee someone from the EDA will reach out to ask for some additional proof. Same thing with 1099 employees. If you have a way of identifying them and showing us proof of withholding, it's greatly appreciated and it does accelerate our process. Any W-2 withholding should be provided. I do know that the majority of the AUPs that we see do show reductions and eliminations if the withholdings were not applied properly. And it is greatly appreciated when we can see exactly what has been disallowed on the part of the CPA. Disallowed expenses. Anything the client pays the CPA specifically to prepare the AUP is not fair game. We will not be calculating that amount within the award calculation. Any fees paid to the EDA to obtain the tax credit award, including but not limited to budget review application fees, issuance fees, transfer fees, that is not something that is counted as a production expense, so that cannot be included in calculation of the award. Story rights, intellectual property acquisitions, copyrights and such are not allowed. Any disallowed fees that the CPA has identified, it's tremendously helpful to us if we have that itemization. That way, if we find those fees listed anywhere, if it has been addressed in the AUP as having been disallowed, that eliminates the need for the officers to reach out to the CPA to question any of those numbers. Digital media has its own interesting disallowed expenses. Marketing, promotion, and advertising digital media is not allowed in calculation of the award. Any costs relating to acquisition or licensing of digital media content. Applications received after July 10th of 2024 exclude costs incurred for design, maintenance, and hosting of websites. And intangible personal property, story rights, intellectual property acquisition, similar to film, and any other costs not directly related to production of digital media content. And that also includes salary expense to the extent that that salary was paid for anything that was not allowable as a digital media expense. So if we are seeing a full year's salary listed for any particular employee on a digital submission, we will be double checking that they were 100% involved in the production of qualified digital media. And we will go from there. Okay. Transfer process. We've had some really interesting transfer issues. When we have finished our certification and we are informing the customer, we ask, will you be self-utilizing this or will you be selling or transferring? Majority of the projects do end up being transferred. We do have an email set up with attachments, what we need for the transfer, fully executed purchase agreement and transfer application. We do need valid tax clearance for both the buyer and the seller. And again, we need that 000 suffix after that masked tax ID number. We do need the issuance fee, which is a one-time fee on the credit, and the transfer fee, which based on the size of the spend will be per transfer. If the customer is selling a portion and keeping a portion to be issued in their own name, we would need to know that at the time that we get it. If there are going to be multiple transfers, we would need to know that as well. We will only send over to taxation once. And what we want to do there is we do need to have the full award amount issued, regardless of how many separate tax credits are going to come out of it. For example, for a $10 million award, you may sell 5 million, sell 3 million, retain 2 million, but we need to send everything over for a total of 10 million to be issued at that point in time. Some issues that we have found is there are name or tax ID number mismatches, or we have stale tax clearance. That slows us down or stalls us. These are things that we cannot submit to taxation once we are aware of that. Going back briefly for the issuance and the transfers, if the customer wants to sell but does not know who they're selling to, we are able to have the tax credit issued in the name of our applicant, and they can at a future date surrender and transfer that. We would take care of facilitating that transaction with taxation for them. Up next, this is surprisingly, it took 3 years for this to come up. A buyer of a tax credit must have corporate business tax or general income tax liability for the vintage year of the credit. We did actually have one come through that was actually, the buyer was not in existence for the vintage year of the tax credit. So there was no tax offset to be applied there. So we sort of had to go back and have a redo on that one. The tax ID number on the application has to match the tax ID number on the tax clearance certificate. Otherwise, we don't have any assurance that we are dealing with the same customer in both scenarios there. The buyer must be fully and properly formed and registered in New Jersey. The buyer name and tax ID number must be consistent on all documents. If something comes back where there is an issue where taxation cannot issue due to a registration issue, an outstanding payment issue, any other administrative deficiency, the relevant parties do need to take that up with taxation themselves. For privacy reasons and purposes, EDA is not given any specific detail, advice, or guidance on how to get such an issue resolved. So that is going to be between either our applicant or the buyer and taxation to resolve whatever issue is slowing or stalling issuance with taxation. Regardless of whether you are getting the tax credit issued in the applicant name or in a buyer name, our general guidance has been that it takes taxation an average of 30 days to do their full due diligence, make sure everything is in place. There have been some instances where it moves a little faster than that, but we do give them 30 days before we follow up to determine whether there's any issues, and make sure that they have the proper parties to contact, to reach out to if there is something that can be resolved with taxation. And up next, we do on our website publicize the transfers in this program. The information that we capture and publish, and that is updated on at least a monthly basis from what I've seen, is the name of the transferor and the name of the transferee, the value of the tax credit transfer certificate, and the state tax that the credit is going to apply to, whether corporate business tax or general income tax. We do not publicize what the selling price was on that, whether it was 76 or 94 cents on the dollar. That information, while captured internally here, is not publicized on our website. And for more information, obviously our website is going to be a fabulous resource. We've been trying to keep forms and information updated there. The FAQ is updated on a frequent basis. We do have a dedicated email address for film certification questions. We find this is useful so that you don't bump into somebody's out of office message and then reach out to somebody that maybe you weren't dealing with earlier and needing to start over again. This way, all staff has access to that film certification mailbox. Resources again are FAQ sections, the eligibility checklists, and there are detailed tax credit instructions on our website. We do have a post-attendance survey. This QR code will lead you to the May 2025 version of the survey. As we had mentioned earlier and in the publicity for this, we are capturing the firm names, the CPA firm names, for publication on our website. And this way, potential applicants who are still seeking a CPA for AUP purposes would know who has taken advantage of these training opportunities and is possibly more familiar than someone who has not done anything with us in the past. And we are going to be putting out the February and the May listing. In the near term, we will be looking to update that frequently. This, as mentioned early on, is being recorded. And this way you're still able to, if you weren't able to attend the live session, you will be able to watch a replay of it, still participate, and still have your firm name publicized on our website as having attended or viewed this session. And I think we're up to coming attractions. At this point, the next session that we are planning for will be in November. There are rule changes pending. We've got all kinds of changes in process. We're hoping to get things firmed up and be able to give you some more guidance on those things as they happen. I have been advised that there is an application for post-production expenses in digital media, and that is expected to go live this summer. We are currently in the process of revising the AUP form to encompass a lot of the more recent changes in the legislation in the program. We're working on the updated payroll certification form, and I'm told that our technology groups are working on some updated reporting technology changes that should enable us to not have to have specific links in secure sites generated and issued out on a limited basis. That should make it a little easier for upload of secure information. And we are all pretty much eagerly awaiting that one. So with that said, we'll do this again in November. In the meantime, Taishan, do we have anything in our chat? Any questions? This went faster than I expected. We may have time for Q&A.
Yeah, I'm addressing the questions in the chat, but I don't know if anyone
Okay.
has anything.
And anything for the good of the group?
There was a question in regards to the effective date on the BRC is sometimes missing, and what do we do to essentially, do we accept that, or how do we work around the BRC not having an effective date?
I think the fact that you were able to generate a BRC should be sufficient regardless of that effective date. Although I have to say I've not seen that. Because I know that questions had come up before with I have a BRC with an effective date of 2023. And it's like, well, if that was the time period of the expense when the applicant was supposed to be looking at it, then that should be well within rights there. But I don't know that I've actually noted one missing an effective date. So whoever brought up that question, I'd be really interested if you could maybe send a copy of that, if you have an example, to our film certifications mailbox. Would love to take a look at that. Shall we see if we have any other questions on this fine Friday of a holiday, of short holiday week? Everybody's quiet. I guess maybe we'll wrap up if, give people another minute, then maybe wrap up and let people get started early on their weekend. Okay, I'm not seeing anything else coming in, so I'm going to hope that we've answered all of the questions that came up in February. Any questions that came in on the chat here or come in via our mailbox will obviously be addressed next time around. We will go from there. I'll just tell everybody have a great rest of the Friday and a lovely weekend. Thank you all for joining.